Hello and welcome back to On the Brink. I'm Nick Carter. This is the Mining Mini-Series. This episode is brought to you by Compass Mining and Public.com. More on them later in the episode. Today is December 20th. Hope you're all enjoying your holidays. Hope you managed to take this week off. If not, let's dive into some mining topics. I'm sitting down with Anders Larson, the head of strategic finance at US Corp, which is a large Bitcoin miner, which hitherto has not done a lot of PR, not very well known. So this is a very illuminating episode. Anders has an encyclopedic knowledge of mining, and as one of the key decision makers for a large mining firm, is able to speak in a very detailed way about how these companies make decisions. We cover a lot in this episode. ASIC depreciation, how they target renewable energy, how they think about uptime on the units, the political risk in mining, whether Chinese hashrate has been eliminated or not, what the effect of future Bitcoin bans might be. This is a very detailed and informative episode, yet another in the mini-series. Let's dive right into it.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Hello and welcome back to On the Brink. This is the mining mini series, or perhaps we should call it the macro series. Wait, what's the opposite of mini? The mining large series. because it's actually just never going to end. We're going to do the mini series forever. Today I have a very eminent guest, Anders Larson, head of strategic finance at US BTC. Is that right? The Bitcoin miner?
That is correct. Yep.
I was getting the name wrong before. And also an investor at Cavalry Asset Management, which makes investments in a number of things, including Bitcoin startups. So, Anders, welcome. And why don't you tell us a little bit about yourself and how you got to now?
Yeah. Well, thanks for having me on, Nick. So a little bit about myself. Got into this space broadly in undergrad, I guess a bit over half a decade ago now. Really came out of all the game theory research I'd been doing previously at the end of high school and the beginning of college. So continued learning in the space that way. From a professional standpoint, I went to traditional buy-side firms where I covered semiconductors and then anything crypto related at those shops. Started at a tiger cub called Matrix, and then more recently moved to Cavalry, which, as you mentioned, is a traditional hedge fund. But we have an entity now, Cavalry Crypto, which I manage, which makes investments primarily in the Bitcoin space. But we keep an open mind to anything in the area. We are investors in US BTC, and as you mentioned, it's a little bit funny how I'm almost working two jobs, but I was essentially lent out to US BTC, which is, again, we're investors via the Cavalry Crypto Fund, but I was lent out to sort of help scale and think about investments and growth decisions as we rapidly scale the operations.
You're a busy man. You also you're part of a very eminent Wharton class of 2018. If I'm not mistaken, which has several crypto luminaries.
Yeah, they're
among your colleagues there. Yassine, right? If I'm not wrong.
Yep.
The famous Yassine, and Derek Sue. Who's been on this podcast. If I'm not misremembering. So that was a good year.
It was. Derek was actually my college roommate and teammate as well. So I certainly know him very well.
Awesome. So we're here to talk about mining primarily and how US BTC makes decisions. I think, there's not that much discussion around how miners decide whether to take risk on or off, how they think about allocation. And that's what I'd like to get into. Also, US BTC has hitherto been relatively unknown. So I think it would be good generally to get your perspective. Now, before we start, you said you covered semis. What do you make of all this chatter about Bitcoin miners clogging up the semiconductor supply chain and, depriving, young Johnny of his Christmas presents and his motorized fidget spinner or whatever it is that kids get these days?
Yeah, no, I've seen those reports and all that stuff. I mean, from Bitcoin mining specifically, it's simply not true. All these ASIC manufacturers are tier 2 customers. They'll never be able to bid out people like Apple, Qualcomm, anybody else who wants wafer allocation from the TSMs, the Samsungs, the SMICs of the world. So they won't get the allocation ahead of them no matter what they wanted to pay for it. So it's just simply not true. Bitcoin is not clogging up the supply chains. There are a lot of other issues that are clogging it up: COVID, transformation, supply chain issues, all those things. Bitcoin mining is certainly not the culprit.
So what makes a buyer a tier 1 or tier 2 client? I mean, Bitcoin is certainly large, like the Bitcoin mining manufacturers, Bitmain, what's mining. They're large firms. I mean, billions of dollars worth of orders. What makes them second tier?
Reliability of the orders. So people like Apple, even in downturns, are always ordering, right? Nvidia, Broadcom, Qualcomm. These are the stuff like Volkswagen, things that go into your cars, like the essentials. Bitcoin, they still see TSM, and rightly so, especially after the last bear market, as a very volatile industry that orders can stop pretty quickly and almost completely freeze. And so they've seen that happen before, where Bitmain had to cancel a bunch of orders. They weren't happy about that. Now you have to pay cash up front due to that history. But it really comes to the reliability of the revenue stream. And so these other tech giants and things that we use all the time have priority.
So does that mean effectively the Bitcoin miners just get capacity when it's available, and then when it's not, they're just shunted out and don't really get allocation?
There's certainly some of that dynamic. I mean, they can get some reserved allocation, but it's not that notable as a percentage of the chips coming off the line. But yeah, if it's a really high demand season, like the end of last year or the beginning of last year, they were really out of luck for getting any upsizes and allocations. So that is generally the dynamic. Yeah.
Gotcha. Well, certainly a different story from what we hear in the press about it. Now, in terms of US BTC, what has kept the firm so low profile to date? I mean, I think a lot of folks, even smart about mining, would have a hard time identifying you guys. So what explains that?
Well, one, it's a relatively newer firm. It was incorporated technically at the end of 2020. So although the founder and CEO has been in the mining space for 5 years now, at least, he helped with Riot build out their platform. And it's also intentional. There's no need for press. We don't have really customers. Our customers are our investors. Our investors know us very well. They know our sites well. They know the team well. So up until this point, there was really no reason to start putting a more public face on it.
And what can you tell us about the scale of your operations, both now and sort of in 12 months' time?
Absolutely. So today we have around 1 exahash online, and we plan on scaling that to nearly 10 exahash by the end of 2022. So really rapid expansion. We have a good footprint and roadmap as to how we're going to do that. I can't get too specific on the energy sites that we're looking at, just due to competitive reasoning. But that is sort of the growth trajectory that we're forecasting and planning for. It's exciting, but it's a lot of work.
Right. And do you guys have like a specific, mandate or angle? Like there's some miners that will describe themselves as like, we are the 100% renewable miners, or we only mine with curtailed or energy, or we use stranded natural gas.
Yeah.
Or are you just accepting all sort of energy types?
Yeah, we're certainly ESG focused. We're America focused or North America focused. We will look at Canada as well at this point. And when I say ESG focused, we try to be almost all renewable if possible. We will touch natural gas, and worst case, we'll do offsets for that natural gas. But as of today, the majority of our energy from our sites is renewable, and we plan to continue and actually expand the percentage of renewables in our portfolio. And we'll be part of some councils that will give some data on that in the coming months.
Well, I think I can guess which council that that may be. There's not too many to choose from. And when you say renewable, I mean, do you mean, nuclear, hydro, wind, and solar?
You named them.
That's yeah. I'm assuming it's easier to find hydro than it is the other names on that list.
That's correct. Yeah, hydro has been easier to find to date. The other names, I believe we're going to have some success, and we have some plans to have success there, but certainly you're correct. Hydro has been easier to find.
So with regards to wind and solar, I mean, we've done a few episodes, in fact, within this very same mini-series, talking about how miners can exploit wind and solar, which might be curtailed, and actually maintain a sufficient uptime to mine profitably, right? And in particular, the Lancium episode explored 3 distinct models for mining using relatively decarbonized sources of energy inputs, even if they're intermittent. And this is like a big source of pushback I hear from environmentalists, which is, it's kind of a self-own because, they're basically admitting that wind and solar can never really work for the grid at scale. But either way, they say, wind and solar are too intermittent, so it doesn't work for Bitcoin miners because they have a big opportunity cost. What are your thoughts on this? I mean, do you believe that wind and solar can work for Bitcoin mining?
I do believe it can. And I think that, we're actively looking at where we could maybe fit in there. Obviously, you have to do the economic analysis of how much downtime you're going to have as a miner. But what I also view, which I think might be bolder and where this industry is going to head, is that this industry is going to continue to vertically integrate as well as horizontally integrate. There's just too many chefs in the kitchen right now, frankly, people of different operational excellence. And, what we're going to see, in my opinion, is actually potentially the build out of actually new farms and stuff that actually oversupplies in the grid, cheapens energy for everybody. But let's say at night when people aren't using as much, instead of paying people literally to use the energy to heat their homes, you just turn on the Bitcoin miners. And one facet that allows that to actually continue to look better and better on the economic side is that due to the slowing of Moore's law, and part of the reason I was so excited about this investment and being here, you can now depreciate miners over a longer period of time because the increases from new generations is radically decreasing, which means that actually the CapEx costs are lengthened, which means economically, we downtime maybe a little less if the energy cost is really nice.
Right. So, and I think this is such a critical point. We actually spent a whole episode with Galaxy talking about depreciation periods, which is so interesting. The lengthening of the cycle here. So what your point is, historically, mining used to be a function of racing to get to new hardware as fast as possible, plugging it in. Today, as ASIC generations are produced less frequently and your new hardware goes obsolete more slowly, you have a longer time horizon and you care more about your electricity costs as opposed to just rushing to get the new hardware. Is that the idea?
I think in the longer term, absolutely correct. I think right now, just given the rapid increase in Bitcoin price, the lack of miners being able to come online due to supply chain shortages, because again, they can't get they would have if they could get anything from Apple, but Johnny's getting his Christmas gift, like you said, so they can't. So right now we actually have, it's kind of a mix, but you have to put your long-term hat on as an operator, where at the end of the day, we know cycles can go viciously up and viciously down, and electricity cost is what's going to make it so whether you have to turn off or turn on. But right now we have a mix of a race for both, frankly. And obviously all the China ban, and then a little bit from Kazakhstan who's sort of wobbled back on their full ban. There's a race to United States and other energy sources. So it's sort of a race on all fronts right now. And it's especially just because it's so profitable.
Right. Yeah. I mean, you're miner margins are enormously wide right now. So there's definitely a convergence that still needs to happen. What you are suggesting, though, is that there's a relationship between the carbon intensity of the Bitcoin network and the depreciation cycles, like the length of time you would depreciate your machines over. Is that a fair thing to say?
There is certainly a correlation there, and it really goes to the fact that if you can depreciate these machines over 4 years instead of 2, and it's not just some accounting gimmick, these things actually will probably be useful for 4 to 5. I would actually push it. I think you can do 5 years, but we do 4. You can start to look more at this intermittent energy sources. You can look at more downtime, and obviously you want to be mining as much as you can, but you can actually look at economic models and partnerships going forward. So yes, there is a correlation there.
And when you build your models, you're not assuming or requiring 100% uptime on your units.
It depends. In our current facilities, we typically do. There's a little bit of a downtime because there always is downtime, and we like to under promise and over deliver to our investors. But we do, for our current sites, actually have almost 100%. We do demand response and other programs, but essentially we assume roughly 100% for our current facilities. These types of partnerships would be very different.
Sean Connell over at Lancium has been on this campaign to explain how if you are active in the spot markets, a grid like Texas, for instance, your all-in price of power is less if you don't assume 100% uptime. So if you take it down from 100 to 95, your power overall is cheaper. Because the demand response, so the grid is curtailing for you for a small portion of the year, and then also because you're just not buying that last final 5% of energy where it might be the most expensive.
That's absolutely correct. He's absolutely correct.
But all of that said, right now you're mostly trying to keep the miners on as much as possible.
Yeah, and I think it's fair what you said, 95%. Like we do incorporate some downtime, and it's roughly in that single digit number because it does do the demand response. You curtail, you don't need to buy the energy if it's super expensive for some reason that day. I mean, that's part of demand response. But yes, you're correct.
So when you are doing your analysis about future hash rate growth, because that's one of the things you sort of have to anticipate and project, I mean, it turns into a game of course, looking at how many units have been ordered and what the foundries are doing, whether the manufacturers are getting allocation, how many units they can reasonably deliver. But then there's also just political risk, right? I mean, you now are trying to estimate, is a major jurisdiction going to crack down on miners? So how much weight do you give to the political risk in your assessments?
For our base model and whatnot, we have footnotes for it, but it's very hard to predict. And political risk is huge. And what we have is we look at our public competitors who publish this, and we actually have more conservative, and by conservative I mean more aggressive ramp ups in the hash rate, essentially especially in the short period of getting all that Chinese hash power back online in an aggressive time frame, as well as new miners being produced online as well. We'd like to get it's a more conservative modeling, and when it comes to, though, is New York going to do something? Is Massachusetts going to do something, like state by state? That's really, really difficult to predict. So the way we model is based off what we think historically these ASIC manufacturers can tape out in the longer out years, and the short-term and aggressive ramp up from miners that were kicked out of countries. You have to put your finger up in the air and feel the wind, but we do the best we can, and since we've been modeling, we haven't been too far off. I've actually been pretty proud of how we've been able to model it out.
So did you anticipate the kind of V-shaped hash rate recovery, which
Yes.
we saw, which has been very aggressive?
Yes.
And you attribute that to miners successfully moving their units out of China and into new domiciles, or do you believe that some of these Chinese farms have actually come back online covertly?
I don't think all of China's actually shut down. I do think that they've made even more aggressive stances of trying to track IP addresses, so they're not backing down on their ban. It seems they're actually getting even more aggressive. I think that some of the older units that were in China, they probably won't even ship them out of the country and just leave them in the dustbin. But yes, the majority has been successful in trying to shift that out of the country. I think Kazakhstan was a huge net gainer. The United States is obviously a huge net gainer, but I think they were successful in getting a lot of those online. And then to fill the gap on the V-shape, there are new units coming too, right? The ASIC manufacturer producing. So it's a mix of both, but absolutely, China's been able to get some units back online overseas, the Chinese miners.
This episode is brought to you by Compass Mining. Compass Mining is the world's first and largest online marketplace for Bitcoin mining hardware, hosting, and ASIC reselling. Bitcoin mining is only getting bigger, and so is Compass Mining. Compass is adding 280 megawatts worth of hosting capacity next year, with more to come. That's over 6 times Compass's current hosting capacity, meaning more people can mine Bitcoin. With Compass, anyone can mine Bitcoin. Start mining your own Bitcoin by visiting compassmining.io today. Getting started investing, whether it's public equity or digital assets, is pretty tricky these days. On public.com, you can start small with fractions of shares, invest in what you believe with any amount, exchange ideas with a community of like-minded investors. I've been using public.com for a little while now. The thing I like about it is the social function and the investment-focused discussions on the platform. They also offer public equity as well as a number of digital assets. It's pretty handy to have it all in one place. Public.com takes the privacy of the community very seriously. They don't participate in payment for order flow, which is a practice in which brokerages sell your trades to third parties. They route your trades to the exchanges directly with no middleman. Start investing with as little as $1 and get a free slice of stock up to $50 when you join public.com today. Visit public.com/onthebrink to download the app and sign up. That's public.com/onthebrink. This is valid for US residents 18 and older, subject to account approval. See public.com/disclosures, not investment advice. Just in the last couple of weeks, we've seen Kazakhstan messaging basically hostile policy against Bitcoin miners. According to Cambridge, Kazakhstan was somewhere in the realm of 15% of the network. What do you make of that? I mean, is this kind of a situation where wherever the Bitcoin miners flow to, then they run into political troubles in the new jurisdiction?
It depends. So Kazakhstan certainly signaled that, and then they backed off a bit, because at first it was like a really hard cap. It was like something like 100 megawatts for the entire country. I mean, that's nothing, right? What, 15%? It was a large percent, you're right. It was like 15% or 20% of the network cap.
That would have been a de facto ban if they'd put that through.
And then what they said was only licensed operators, like people with the right licenses. Love to see how they acquire those licenses. But and look, this is a function of also that we are in a bit of a global energy crunch right now. Natural gas prices have been soaring for the most part. Coal has been soaring. And so Kazakhstan also had to deal with, these guys were firing up a lot of coal plants. And so I don't think it was really an environmental thing for Kazakhstan. I think it was more that coal price was going up dramatically, and they need to make sure that their citizens got, their heating and everything done instead of these new Chinese miners coming in and taking it. But I think they're going to strike a healthy balance there in the longer term.
So I'm kind of developing this idea that whenever Bitcoin mining does have a tangible net effect on energy prices to the effect of disadvantaging households and things like that, that's where you start to see bans. And then elsewhere, you would hope and expect that policymakers that see Bitcoin having a favorable effect on the grid, which is certainly the case in some places where they're buying energy that is uneconomical, you would see it tolerated. Is that kind of the way you think about it, where basically there's this permanent veneer of political risk for operations that are genuinely congesting the grid, and then others are more secure?
I would completely agree with that. I mean, that also follows basic policy logic. What I do hope to see, and I'll take it one step further here, though, is that I do see a vision. Maybe it's a 5-year vision, but this industry will vertically integrate. I think we're going to have more partnerships with the semi manufacturers. I think we're also going to maybe even build out energy assets themselves, right? So we can actually help robust build up the grid and also build up energy assets, which net can help that place. But you're absolutely right. Look, if Bitcoin miners are legitimately congesting electricity networks and the citizens are getting pinched by that, I would put a much higher risk on the toleration by the local policymakers.
So then your job as an allocator is to, just for purely financial reasons, is to avoid installations that would catch regulatory ire in that way, and to slot into the grid in a way that is the least disruptive as possible.
There are certainly some senator states that I'd rather be mining in than other senator states. And I'm happy to hire those other senators, union laborers, bring good jobs to their towns. A lot of these are dilapidated factories. They need good work. We can bring good work to those places. So hopefully, I think mayors, local police officers, all the local people love us, right? It's just true. And so hopefully these senators can realize what we're actually doing on the ground.
So New York is probably the state that is agitated against Bitcoin mining the most. And if I had to guess, I would say I think it's actually probably likely that during the next legislative session, they've actually pushed through some kind of ban or more onerous regulation. New York is, in my estimate, probably the number 2 state in terms of Bitcoin mining in the U.S. What do you make of that? I mean, a lot of it, I think, is hydro from like the St. Lawrence River in upstate. I mean, I've been to some of these facilities, coin mint up there on the river. And, that's not an energy asset which is even that transmissible down, to the south. I mean, there's just constraints in terms of getting that energy down. And so the miners are gobbling up pretty abundant hydro energy. To me, like, the presence of Bitcoin mining in New York doesn't seem that disruptive. Even if you look at Greenidge, that's a natural gas plant. They're feeding energy to the grid. That's a plant that wouldn't exist if it weren't for Bitcoin. And that means the grid can benefit from the existence of that plant, which, it's pretty good overall. I mean, there's nothing fundamentally wrong with natural gas plants. We need natural gas for the grid to work. That's just a reality. So, do you think that a ban on Bitcoin in New York State, Bitcoin mining, does that increase the carbon intensity of Bitcoin net?
That is a really good question. Net, yeah, most likely, yes. I'm not sure I agree with you that they're necessarily going to push through a ban, but it's something that I'm certainly monitoring. Again, I think that if they did, I think these legislators would need to go and explain to the average person and the union laborers and the officers we hire for security why they're all out of their nice extra jobs. And right. the local politicians and the locals like us, and they're not seeing any issues with their electricity costs or anything like that, and we participate in demand response. We're not interrupting anything there. So it wouldn't come based on logic if that ban came.
Yeah, I mean, the thing that gets me is when I encounter anti-Bitcoin people, I honestly feel like this is the same as the debate against gun control, actually, because the opponents tend to be much less informed about the thing that they're debating, whereas the proponents are the enthusiasts and the operators, and so they know about the thing. And it seems similar, like... That might be a controversial thing to say, but in the case of Bitcoin mining, the proponents have an encyclopedic knowledge about Bitcoin and a good knowledge about the energy grid because they are energy consumers at large scale. The detractors tend not to know much about energy, is my experience, frankly. I mean, like, people will get basic things wrong, like they assume electricity is never curtailed. Like, oftentimes they won't be aware that curtailed energy is a thing, or they assume that energy is infinitely transmissible with no cost, right? And so that then they're upset when Bitcoin miners are consuming renewable energy because they say, oh, that could have gone, this renewable energy could have gone to a hungry household to heat them and power their iPad. But, in many cases, there's transmission constraints.
Well, Nick, it goes to, look, even before I joined this full time, I was an expert in energy. I've learned a ton since my time at US BTC, right? But it goes to, for example, how do we expect these, and I hope they do the research before they pass legislation, but it goes to what we were just talking about, semiconductors. I mean, do I expect these legislators to know the semiconductor market, know what Bitcoin is and why Bitcoin mining matters, and then the energy markets? Honestly, I would hope so, but probably not. I don't think many people really know how the semiconductor supply chain works, and I think that it's sometimes it's a political show as well, right? It's easy to go, point your finger at Bitcoin miners and say they're the reason why global warming is going to kill us all in 30 years. It's like,
Right.
It's just a ridiculous statement, though. It's not based on fact. It's based on feelings.
I mean, look, if 30 bips of global electricity consumption is what's going to tip us over the edge, I think we have a big problem. It might take more than that to, fix global warming. But, yeah, I mean, the thing I've tried to explain is that I'd love to, actually verify this for good. If New York State mining is done with significant amounts of hydro, and if it's done in a generally decarbonized way, which I believe it is, then if you ban it there, you've given a subsidy to mining everywhere else. And that includes mining in Iran and mining in Venezuela and mining in Kazakhstan, higher carbon intensity places. And I think that's the net effect of American policymakers banning mining is they ban the cleanest corner of the Bitcoin mining industry.
You're correct. I think it's us and Scandinavian countries, right? Arguably the cleanest. Maybe Scandinavia's. I don't know if they're slightly cleaner or slightly less clean, but they're in the same ballpark as us American miners. And look, bans are subsidies, or Christmas came early for other miners who aren't part of those jurisdictions. I mean, look at the huge benefit to gross profit margins because of what China did to United States companies. That was, Xi gave us a Christmas, came early for us. So
Yeah.
yeah.
And it's funny that it's precisely the policymakers in the cleanest countries that are agitating against Bitcoin mining. I mean, the supreme irony of Sweden and Norway agitating against it is incredible. And it is a reality that there is mining in some high carbon intensity places, and those are places that are not going to be persuaded to turn off their Bitcoin mining operations. In some cases, I think they're state sanctioned. Iran is not going to stop mining, nor is Venezuela, and they're certainly not using hydro in those places.
It's also goes to there's a line in the debate. Look, we're ESG focused, and we really do believe in renewables. We actually think the pairing is even better in the long run. But the truth is, it also goes to the point that some people make is like, why is this industry under the ire for energy usage? Like, what about your Christmas lights you put up, or what about XYZ? And like, it's an interesting. That's a more philosophical debate, but it's like, why are we even having to have this discussion? Like, what? Like,
right?
Yeah, there's so many energy that use so much more energy.
We also don't reason about energy in this way. And it's like we've conceded this moral high ground of saying, it's like we've already lost by participating in the debate, by saying, oh yeah, no, we have to morally justify our consumption of electricity. Like, that's not the way that policy is made. It's not like, oh, let's run through every single way to consume electricity and determine what's moral and what's immoral. It's, can we produce abundant energy in a way that, works in terms of GDP growth and civilization and, hopefully inhibits climate change? That is the way that it sort of ought to be and sort of historically has been. And we're in this weird neo-Malthusian world now where we're fighting over every last scrap of electricity without realizing that abundant energy is the key to growth, effectively.
There is a linear correlation between energy consumption and usage and the progress of civilizations and countries. It's not, maybe it's geometric, not even linear. It's incredibly important. The thing is, look, we're going to have to participate in the debate. We're happy to participate in the debate because also we stand on very strong ground to participate in the debate. Not only are we not like in 99, they were saying, oh, the PCs are coming, burn more coal, like get ready to fire up the coal plants. That was a narrative when the internet was getting started. That was a real narrative, okay? But not only that, we actually, again, can actually fund out the building of renewable assets and have a really, really nice pairing. Because it is hard, like you said, there's transmission. A lot of this stuff gets stranded. Where the wind is isn't necessarily where the people are. Where the sun is isn't necessarily where the cities are. And there's all these transmission costs, all this CapEx costs. We can help with that if we're allowed to take up a certain amount of the load. We essentially subsidize the build out of clean energy and subsidize energy abundance, which will then subsidize other things. It's wonderful.
So what do you think it'll take to sort of end or win the debate? I mean, in my view, the proof is in the pudding. So the more we can demonstrate to people business models that are economical and use renewables, the better we look. But in some sense, Bitcoiners have been talking about this for a while, and environmentalists certainly aren't persuaded. So, what does victory look like?
It will take time. I mean, frankly, I think it's also because, some of the other people are they just view Bitcoin as fake internet money and worthless. And I think they feel for some reason they're able to make that judgment. Obviously, that's not what I view Bitcoin as. We don't have to get into why I think Bitcoin is the most robust settlement layer ever built or blah, blah, blah. But, I think, look, we're going to continue to have the debate. Some people won't be convinced, but we will work. Look, people like businesses, people like jobs. And when the proof's in the pudding, eventually you win the debate. And maybe we'll have to get to the point where, there's hyper Bitcoinization or something like that, where, Bitcoin has become so important that no one's talking about AWS's energy consumption. Because no one's
right.
You go shut down AWS, your Google Chrome browser, or actually, well, Google uses their own cloud, but it won't work. So no one even debates that anymore.
Yeah, the funny thing to me is that according to my calculations, the gold extraction and refining industry still does use more energy than Bitcoin, and it's fundamentally high carbon because you can't really decarbonize a gigantic truck carrying ore from the mine. Those are physical industrial processes, and you're literally sifting through a ton of rock to get maybe 6 grams of gold. That's a good yield, right? So, that's a physical process which requires diesel, and frankly, all sorts of other horrible compounds to actually extract gold, arsenic, mercury, things like that. But just on a apples to apples basis, gold's energy consumption is greater, right? I think as of right now, I would say it's greater. And so the thing is, no one really complains about it. I mean, certainly it doesn't get the attention the Bitcoin mining does. And I think it might be because gold has kind of a 5,000-year track record, which I'll give it credit for. But, it's also a global industry involved in the extraction and creation of a commodity, which allows you to store wealth outside of the state or the banking system, which is exactly the same as Bitcoin. And yet Bitcoin is singled out in this way. So I can't quite understand the double standard there.
Look, you can't understand it because it doesn't make logical sense. Look, gold has a very long history. You can't complain about it because no one's going to listen to it and be like, all right, sure. And eventually I think we get there with Bitcoin. But, frankly, when I speak or will continue to speak on this subject, I try not to point fingers at other industries and be like, well, look at them, they're worse than us. I feel like it doesn't really convince the environmentalists or people who are against it. And it goes against how I think about energy consumption too. Energy consumption is fundamentally a good thing. And yes, there are ways for it to get cleaner, and we should work towards that goal. But we actually will help work towards that goal. So I generally try to stray from pointing fingers at other industries. It's helpful to keep things in perspective. But I feel like it's less convincing for a productive, getting people over the line to not wanting to shut you down.
So, yeah, that's fair. So when you think about the hash rate transition, quote unquote, I mean, the US has obviously done well. US capital markets are very, they're powering this growth in US domiciled Bitcoin mining, which is really exciting. It's cool to see, the connection between strong governance and common law, leading to robust capital markets, causing the development of this industry here as opposed to other countries. I think that's just a great vindication of American progress and just American institutions. I think the latest estimate was something around 35% of mining, according to Cambridge, which, you know, we can quibble about, is U.S. domiciled. Where do you see that going? And also, do you think that is a reliable estimate?
I think it is a reliable estimate, at least as far as estimates go. I think that U.S. will continue increasing, especially in the next 12 to 24 months as a percentage of global hash power. One of the things that the U.S. has is states' rights, which is good. So we do have a judicial system that makes it harder for blanket bans. So if you go to a state that's maybe clearly shown that they're favorable and have a positive bend towards this industry, and they understand what's going on, what we can do to help their grid and actually expand energy, the U.S. looks really good. The U.S. is also one of the most abundant energy markets in the world. We have a ton of energy. I mean, matter of fact, we, depending on administrations, we shut down and turn on, natural gas or drilling or whatnot. There is a huge abundance of energy here in the United States. So between that and our due process and our capital markets, it's almost the perfect formation for Bitcoin miners. So I expect that to continue to go up. And then it will plateau at some point because other countries people will find cheap energy and do the arbitrage. I
Right.
fundamentally believe that.
Yeah, I'm actually a little surprised that some of the energy or mineral rich states that, derive a lot of their wealth from the export of energy haven't begun mining, at least openly yet. That's kind of what I would expect to see, is if to the extent their business model is to convert energy into wealth, why wouldn't they do that through the medium of Bitcoin mining? In terms, one critique I see is, these fears about the US having a plurality of mining, which I think are unfounded, but, the idea being that it gives the government discretion over Bitcoin itself, which is, and of course you can, explain the difference between the highly centralized Chinese model where one individual makes decisions and then the more federated American model where it's state by state. But yeah, what do you make of that critique?
Come on, it's like China FUD 2.0, but it's even like weaker because of what you said. We have states' rights here in America. It's not, we don't have the same sort of rule that, and frankly, China, they're not like, they do give their provisional governors, or at least they did for some time, a lot of leeway, which is why mining thrived there. But as you can see, the government, they do listen. If Xi speaks, they listen, and that will continue. And so, look, it's like weaker China FUD on this, like, the U.S. too much domiciled here, blah, blah, blah.
Right. Yeah, and, I think it's actually going to become a states' rights issue, frankly, is energy policy. And that's why it's so interesting to see Texas embracing Bitcoin mining so aggressively, because they have their own grid, which is islanded. It's not really connected to the other two. And they have always had an independent streak. They were an independent nation at one point. And I think we might actually see a bit of a tension here emerge between the Biden administration. They might do something regarding Bitcoin mining, and then the states that are benefiting from Bitcoin mining.
Absolutely. If the Biden administration steps in and tries to do something, I think you certainly will see that, and I think the states will win. Any sort of legal proceedings on that. I hope that the Biden administration has better things to deal with than that, but and I don't really trust they're going to do their proper research. But yeah, I think you will see a rift there if they do try to do that, because that does become a states' rights and independence issue. And I think the states, I would think that would be wildly unconstitutional, but we'll see.
When has that ever stopped them? Yeah. I mean, it's not the only wedge issue where the states are butting heads with the government, but it is cool to see the federal system, spring into action, because we have these wildly disparate cross-state reactions to Bitcoin mining. On the one hand, you have Florida, maybe, but certainly Texas, Kentucky, Wyoming, explicit policies designed to attract miners. And then you have states like most likely California and maybe New York and Massachusetts. They want to sanction and eliminate Bitcoin miners.
It is funny, and I also think that we can be nuanced too within some of those states. I would say that the people in upstate New York probably like the Bitcoin miners there. I'm sure that the mayor likes it. I'm sure that so it's like maybe it's the senator sitting in the big city who has no idea where their energy comes from is complaining about it, but the people actually on the ground, I think, probably love the presence of Bitcoin miners in their towns.
So last thing I want to get into is, we've talked about the kind of the supply side dynamics around hash rate, and the factors that cause that to vary. Now, in terms of the actual subsidy, the pool of revenue that all miners compete for, what kind of assumptions do you make around that? I mean, obviously we know what the issuance is going to do. We don't strictly know what the fees are going to do. So how do you think about the long-term fee growth? And, because that has to be built into your models.
Yeah, we do have some fee growth. It's not that aggressive, to be honest, because that's a really tough one to predict. We can have a back and forth, and we're both going to get it wrong. Look, frankly, we're Bitcoin bulls. Like over a long term, we've got quite a number of years before the next halving, and the ROI right now on the capital that we deploy is incredibly quick. Even with assuming aggressive ramp up in hash rate. Obviously, Bitcoin drops to $5,000, the equation changes, but maybe not that much because a lot of miners will then have to shut off, and maybe we don't. Right? That's the other factor in this. So we have some base builds on transaction fees increasing, but they're not as aggressive. I've seen some really aggressive numbers in presentations, and again, our investors want us to hold the Bitcoin on our balance sheets, which we've done to date. I believe our investors are going to continue to want us to do that. Our investors are our customers. And so what we do for them is through operational excellence, we arbitrage basically energy into this Bitcoin for them.
Right. Do you view Bitcoin mining as a structurally, I know this is a bit of a provocative question, do you view it as a structurally decaying industry just by virtue of the fact that the halvings occur?
No, not really. I do think transaction fees will increase. I think that what it's going to look like is more of like a commodity industry, which I think kind of already is if you really know it. But it's very volatile, the underlying commodity. But I think it's going to end up looking like, I think aluminum producers are probably one of the best examples. Like everyone besides Australia and I think Canada has to shut off when steel producers, this is for steel, not aluminum, sorry, when steel prices drop, and then but those guys have the best energy costs, so they can keep producing the steel while everyone else has to shut off. Then when steel goes up, other plants can fire back on. And so I think you end up looking like more of a vertically integrated, sort of commodity heavy industry business in the long term. But right now it's such a wild west, and there's a long way to go before we get there.
Really fascinating discussion, Anders. Thanks again for coming on. This has been great. Best of luck growing the hash rate to 10 exahash.
Absolutely. Thank you, Nick. Thanks for having me on.
Oh, I forgot to ask where people can follow your work.
Yeah, I guess my Twitter handle will be fine. I hardly use Twitter. If people are interested in connecting, maybe I'll use that platform more as I put out work. And feel free to DM me on there. I will respond at some point if there's something of interest that I've spoken about or something that I'm doing, whether at Cavalry Crypto or here at US BTC. I'm always happy to have a good conversation.